What just happened in the silver market will completely rewrite everything investors believed about supply, power, and pricing dynamics. While most people slept, a geopolitical shock removed one of the world's most sensitive silver reserves overnight. Venezuela's president was captured, instantly throwing control of massive silver stockpiles into dangerous uncertainty. Roughly 400 tons of refined silver suddenly became disputed, frozen, and effectively removed from global circulation. That equals more than 12 million ounces of physical silver no market participant can currently access. When ownership is unclear, supply vanishes regardless of what inventories previously reported. China reacted first, Russia followed, and major banks moved faster than retail investors could react. This was not coincidence, but a coordinated scramble, triggered by immediate supply risk. Retail investors remain largely unaware, while institutional players reposition aggressively behind closed doors. This event is not isolated. It threatens to fracture the global silver supply chain. Venezuela is widely known for oil, but its silver reserves rarely receive public attention. Beneath sanctions and economic collapse, Venezuela quietly accumulated physical silver for years. When currencies fail and trade routes close, hard assets become survival tools. Silver served Venezuela as real money beyond banking systems and sanctions pressure. Industry estimates place Venezuelan refined silver reserves near 400 tons. This silver is processed, vaulted, and ready for export under normal conditions. 400 tons equals nearly 3% of annual global silver production. That amount alone can supply global solar manufacturing for several critical weeks. Now those ounces are trapped inside a legal and military grey zone. Regime change raises unanswered questions about ownership, access, and creditor claims. The United States, international lenders, and transitional authorities all have competing interests. Until resolved, this silver is effectively removed from the market indefinitely. Markets fear uncertainty more than bad news, and uncertainty now dominates silver. This shock hits a market already stretched to its absolute limits. Silver has run global supply deficits for 3 consecutive years. Last year's deficit alone exceeded 200 million ounces worldwide. Industrial demand continues climbing relentlessly across multiple high-growth sectors. Solar panels, electric vehicles, electronics, and medical devices require increasing silver quantities. Investment demand is also accelerating as trust in currencies weakens globally. Exchange inventories have been declining steadily, signaling tightening physical availability. COMEX registered silver inventories are down nearly half from previous peaks. London vault holdings continue shrinking month after month without recovery. This market was already fragile before Venezuela's sudden removal. Venezuela also functions as a regional refining and transit hub. Silver from neighboring countries often passes through Venezuelan processing facilities. With operations halted, regional supply chains are now disrupted entirely. Mining activity inside Venezuela has largely stopped amid security concerns. Weekly silver output losses now accumulate with each passing day. Hundreds of thousands of ounces expected weekly are not reaching markets. China has been Venezuela's primary silver trading partner for years. Through intermediaries, Chinese buyers secured Venezuelan silver despite sanctions. China needs silver for manufacturing and strategic stockpiling purposes. Long-term delivery contracts are now frozen without clear resolution. Chinese buyers are scrambling to replace missing supply immediately. Emergency sourcing pushes demand into already tight global markets. When large buyers move urgently, prices respond violently. Banks face a different threat through massive derivatives exposure. Futures contracts represent far more silver than physically exists. Banks sell silver contracts without holding equivalent metal inventories. This leverage works only while supply remains available and confidence holds. Venezuela's silver removal increases delivery risk dramatically. Short positions now face potential losses or forced market purchases. JP Morgan and other banks must manage physical delivery obligations carefully. Some institutions may be forced into expensive cash settlements. Paper silver claims outnumber physical silver by extreme ratios. When physical demand rises, paper markets become unstable quickly. Russia, a major silver producer, now holds strategic leverage. Russian exports could favor allies while restricting Western access. Such decisions would further tighten global silver availability. Legal battles over Venezuelan assets may freeze silver for years. Creditors view these reserves as valuable repayment targets. Prolonged litigation effectively removes supply long-term. Physical silver premiums have already surged globally. Dealers report inventory withdrawals and rising delivery delays. Asian buyers pay extreme premiums for immediate physical silver. Futures markets show stress through backwardation signals. Near-term contracts trade higher, reflecting urgent physical demand. Mining stocks are reacting as higher prices expand profit margins. However, new silver production cannot ramp up quickly. Most silver comes as a byproduct of base metal mining. New supply requires years, not weeks, to materialize. Stable jurisdictions now command higher investor interest. Physical silver ownership proves valuable during supply disruptions. ETFs and derivatives carry counterparty risk under extreme stress. Futures trading becomes dangerous in volatile, illiquid conditions. This situation reinforces silver's role as crisis insurance. The next 72 hours will reveal critical developments. Government statements, bank actions, and inventory data will signal direction. China's sourcing decisions will strongly influence price momentum. Multiple catalysts could combine into a full supply panic. Global supply chains remain fragile across many commodities. Silver's dual role amplifies instability during shortages. Industrial demand cannot easily slow without economic consequences. Investment demand rises precisely when supply confidence collapses. This creates a reinforcing upward pressure cycle. Venezuela exposed vulnerabilities the market preferred ignoring. Even resolution will not erase long-term deficits. Silver's trajectory reflects scarcity, trust, and geopolitical risk. The race for physical silver is accelerating globally. The silver market has entered a fundamentally different phase.